with your host, Ken Shreve.
Good afternoon, everyone. Ken Shreve with you. Welcome to another edition of Breakout Investing with Ken Shreve. Well, let's take a look at this market turning into not such a great day here. We're selling off into the close, but trying to come back a little bit. The Nasdaq really started to bleed quite a bit there over the past half hour or so. Right now we have the Dow up 17.5 points, close to 0.2% to 11,915. Nasdaq underperforming quite a bit, down close to 22 points. That's 0.8% to 2610 thereabouts, and the S&P 500 down nearly 3 points, 0.2% to 1262. We had a nice push in trading volume on the New York Stock Exchange and Nasdaq for probably the first half of the day, and then volume completely trailed off. It looked like we were actually going to get some volume behind a good up day for the market, and this market is doing what a sick market does. You have strength for a good part of the day, and then as the afternoon winds down and we head into the close, you start to see some weakness. So let's see how we end. By the end of the day, the market still has about 55 minutes to go, but some bleeding into the close here by the Nasdaq. Hopefully we'll recover some of these losses. Nasdaq volume yesterday totaled 1.9 billion shares on the Nasdaq. Volume on the New York Stock Exchange came in at just over 1 billion. Again, it looks like we're tracking to come in a little bit below that pace today. So we'll just see how we end up here. Taking a look at gold today, up 0.2% to $1,529.90 an ounce. Let's see here. We'll take a quick look at silver. Silver's kind of taken a back seat lately, but take a look at the iShares Silver Trust here. That's down about 1% to 34.54. As you can see, really living below its 50-day moving average now for several weeks. We can take a look at gold too. Just mentioned that gold closed slightly higher today to $1,529.90 an ounce. Take a look at the GLD. And that is technically still looking quite strong, holding above its 50-day moving average, an area where it has found support in the past. Still seems like it really can't get out of its own way, though. I mean, it is showing good supporting action at its 50-day moving average. The GLD today is down just fractionally, down about 20 cents to 148.92. The GLD tracks basically 1/10 the price of an ounce of gold. Taking a look at oil today, $94.95 a barrel is where it closed, up 0.2%. And we can also take a look at the dollar. When I want to know what the dollar did, I just check out the UUP. That's the Power Shares Deutsche Bank U.S. Dollar Index Bullish. That's a popular ETF. Again, I thought that 50-day moving average possibly was going to be a ceiling for the dollar, but when you have sellers in the market and the dollar rallying, it really didn't take much for the dollar to jump back above the 50-day moving average. Yesterday, the UUP is up another 0.2% today to 21.65. So let me put a chart back up here of the Nasdaq and talk about the general market here. Again, I've been pretty clear in my Ultimate Growth Stocks newsletter. It launched about a month and a half ago at tfnn.com, and the general message that I've been writing and sending to subscribers is this is obviously a tough market. The Nasdaq broke convincingly below its 200-day moving average today. It's now down about 0.7% to 2613. But the Nasdaq's in rough shape. What's interesting is that you still have a low back on March 16th that is below the 200-day moving average, but it could end up being a support level. The Nasdaq hit a low today of 25.99, so it actually did undercut slightly the low the Nasdaq hit on March 16th of 2603. So the Nasdaq is bleeding pretty badly here. My take on things is that I saw a headline earlier today that Greece is not priced into the market yet. That may or may not be true. I think the situation in Greece, as it has been the case in the past, is probably a little bit overblown. I think what the market is doing here is pricing in possibly slower than expected growth when it comes to the U.S. economy, not only in the second quarter, but maybe in the third and fourth quarter as well. I'm going to stop short of saying that we're going to, fall back into a double dip recession. I think that's extreme. I think the economy is eventually going to show its resilience. And if we do see an economic recovery that takes place later than the second half, maybe it's in the first half of 2012, you'd still expect the market to rally at some point in the third and fourth quarter. So I think we probably could see a little more selling in this market for the next several weeks, but keep in mind that the month of August has been a hotbed for good market uptrends. So I can understand the argument that we could still see some softness in June, maybe into July. But in the end, I'm not going to make predictions about where the market's going. I let price and volume trends in the indexes tell me when to be invested in this market and when to be not invested. And right now, again, my model portfolio is only about 25% invested or so. So I'm definitely in a heavy cash position, basically sitting this selling out and not trying to make money in a downtrending market, because that's a tall order, very, very difficult to do, unless you have a trading mentality when you're buying a stock in the morning, selling it in the afternoon, buying a stock on Monday, selling it on Tuesday. That's typically not how I like to invest. I like to buy stocks at the optimum time when new institutional money is coming into the market, and certainly that's not happening now. And it could take a little while longer before it happens, but I guarantee you it will happen at some point. So let's take a look at the S&P 500 real quick as well. It's in a similar situation. The technical damage in the S&P 500 is not nearly as bad as what we've seen in the Nasdaq. It's still not great with the S&P. S&P now down 0.1% to 1263. It's sitting right at its 200-day moving average. But with the S&P 500, you also have a March 16th intraday low of 1249 that has not been undercut yet. So that could turn out to be a support level. Again, there are some people saying that this market, it's a sure thing that we're going to come in 15 to 20% off the highs. Even with the selling in the Nasdaq today, we're only about 10% from the intraday high of 2888. So it's been a 10% pullback so far. I think it probably could go a little bit further, but I'm not going to give up on the possibility of getting follow through and a new uptrend sooner than some people expect. You have to remember that sentiment indicators are extremely negative right now. It's hard to find bulls out there, and when the headlines get excessively negative, and when sentiment just gets really, really bad, that tends to be when bottoms are put in. So you really just have to prepare for both scenarios. I'm positioned right now for more weakness, but that doesn't mean that I can't shift gears quickly and start putting money to work if price and volume in the major averages tells me to do so. And that's really going to be predicated on if new institutional money starts to come into this market. And right now, frankly, I don't think they have a lot of reasons to be coming into the market. Again, we're in the summertime, a low volume time for the market. So, but again, it will happen at some point. It could happen sooner than expected. It could take a while longer. So it's just kind of steady as she goes. I'm not forcing the issue, and generally not trying to make money in a downtrending market. Some headlines today. The situation in Greece obviously is still very fluid. There was some violence yesterday that we hadn't seen up to this point. Earlier today, the International Monetary Fund, the IMF, said it continues to support Greece on the condition the company adopts the economic policy reforms, the austerity measures that are being demanded. That is what is fueling the violence in the streets of Greece. Also, Ali Rehn, he's the EU's Commissioner for Economic and Monetary Affairs, said he was confident that Eurozone finance ministers will approve the next round of loans to Greece. That's where the uncertainty is. You have the IMF ready to give Greece money, but there's not an accord yet among the European Union as to exactly the best way to help Greece out here. Again, I think the situation in Greece, the Eurozone debt issues are going to be worked out. The International Monetary Fund is going to be there. The EU is going to be there. This will be worked out. I think the recent weakness in this in the U.S. markets is, obviously it has to somewhat do with what's going on with Greece and Eurozone debt issues, but probably more to do with this shaky economy and recent economic data that point to a possible slower than expected slowdown. We really haven't even talked about corporate earnings. I mean, companies are going to be closing their books by the end of this month. End of June, we'll end the second quarter, and then we'll start to see earnings reports again, latter portion of July and into August. So hopefully the news is going to be good. There's a possibility that we could hear some caution from corporate America, regarding the third and fourth quarter, but I think there will be plenty of positive earnings stories, but there could be some cautious outlooks as well. Economic data today, weekly jobless claims. There was some good news. I mean, the economic data has been pretty bad, but weekly jobless claims fell more than expected last week. That was good news. Housing starts and building permits for future construction rose in May. Initial claims for state unemployment insurance fell 16,000 to 414,000 last week. The Briefing.com consensus estimate was expecting a smaller drop to 421,000. So, decent news on the jobless claims front. Meanwhile, we talked about the housing starts and building permits. The Commerce Department said that housing starts rose 3.5% to a seasonally adjusted annual rate of 560,000 units. That was much better than expected. New building permits rose more than expected to 612,000 last month. That's the highest level since December. So good news in terms of weekly jobless claims and housing starts, building permits. The bad news was in this Philly Fed. This is a regional manufacturing gauge of regional manufacturing activity in the Philadelphia region. That fell all the way down to a reading of minus 7.7, similar to what we saw in the Empire, the New York State manufacturing survey yesterday. That also was in negative territory. The Philly Fed today comes in at minus 7.7. The prior month's reading was 3.9. Analysts were looking for an increase to 7. So that was very disappointing, continuing a string of very weak manufacturing data. So that was a tough piece of economic data. Again, when it comes to corporate earnings, when we come back, we're going to talk about some earnings reports that came out earlier today. There was good news in one area, not so good news in another area. But this is another thing we're going to have to start talking about and determining whether this market wants to go higher or lower. What are the chances that corporate America are going to be very cautious on their outlooks for the rest of the year? Hopefully earnings will be good.
Tiger University's Tiger Trading Tracks is your blueprint to building a solid foundation of comprehensive trading tools. An in-depth educational program, Tiger Trading Tracks features a step-by-step process for understanding the markets and creating success strategies for your trading. The Tiger Trading Track journey will prepare you to adapt and develop a personal trading and investing strategy that will perform best for you. While you can't control the markets you trade, a Tiger Trading Tracks education will allow you to understand your personal trading and investing needs and what markets are best suited for you. Now is the time for you to travel your path to financial independence. Follow your Tiger Trading Track to trading and investment success. Go to tigeruniversity.com and click on Tiger Trading Track in the navigation bar. Choose the course that most interests you and begin your education today.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC. Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Okay, welcome back, everybody. Ken Shreve here with you. Breakout Investing on the TFNN radio network. Before we went to break, I was just talking about corporate earnings coming up. Companies are going to be closing their books at the end of June, and we're going to start to see earnings reports roll in. And, I mean, this is still a wild card in the market. I mean, we've got this recent economic data that could be pointing to a slower than expected as some economic sluggishness in the second half of the year. Let's hope that corporate America comes out with good earnings in July, and that could provide a nice bid to the market. Wanted to take a look at Kroger today. Supermarket chain reported nice earnings. The stock is having a very nice day. It is up nearly 5% or so to 24.02. See, Kroger is still trading below its 50-day moving average. That is a situation where a lot of stocks find themselves in right now, trading below key support levels, but Kroger having a good day, up nearly 5% to 24.02. They gave a pretty good outlook, and earnings were up 22% year over year, while sales grew 11% to just over $2.7 billion. They had pretty good things to say about the rest of the year. They did talk about this economic sluggishness, but this could work in their favor. People don't go out to eat. They're buying food, staying home and eating. So this could benefit the supermarkets in the second half of the year. So good news from Kroger, but not such good news from Finisar. That's ticker FNSR on the NASDAQ. This stock is really getting walloped today, down 16% to 1485. These optical networking companies have really been hit hard by institutional selling in recent months. What's interesting is when you look back in recent quarters at Finisar and even a name like JDS Uniphase, a lot of these stocks show very steady, consistent bottom line and top line growth. But obviously there are concerns about growth going forward for Finisar when a stock falls 16% in one day. Once again, the bottom line and top line growth was there, but the company reported weaker than expected sales and gave a soft outlook. Earnings at Finisar were up 50% year over year to 33 cents a share. Sales up 26% year over year to $236.9 million. But again, the company gave a soft outlook. Other telecom fiber optic firms fell in sympathy. Take a look at JDS Uniphase, which I just mentioned. Pull up a chart of JDS. And that stock is down almost 7% to 1540. Similar looking chart fell below its 200-day moving average today, just getting walloped by institutional selling in recent months. And also Ciena, ticker CIEN, another fiber optics company. Shares of Ciena down 5.5% to 1712. So this is a stock also in a world of technical hurt right now. How about Pandora Radio? Remember Pandora Radio? We've had this steady flow of high-profile IPOs. I don't have a chart for Pandora, but it went public yesterday at $16 a share. That was well above its proposed offering range. It hit an intraday high of 26. Shares were recently trading around $15.75, now below its offering price, down nearly 10% on the day. Also interesting to note that sellers have been all over LinkedIn and Yandex, two other recent successful IPOs. LinkedIn closed at $94.25 on its first day of trading. At one point today, it was down about 25% from the close of its first day. So LinkedIn was recently trading. I think we could pull up LinkedIn right here and just get a quick quote. I know it was trading around $71, something like that. Shares of LinkedIn down 7% today to 69.41, so it's getting brought down with the NASDAQ. Also, Yandex, the Russian search firm, YNDX on the NASDAQ. Shares of Yandex not down too bad today, only 17 cents to $30.10. It closed on its first day of trading at 38.84, so it's down about 20-25% from its first day closing price. Okay, let's move on and just take a look at some gainers today. And I want to start with Goodrich, ticker GR on the New York Stock Exchange. This is a supplier of aerospace components, and I have a weekly chart here. Let me pull up Goodrich right before we go to break, and shares Goodrich are having a good day today, recently trading around $90.68. Again, a provider of aerospace components. No news today, but yesterday Boeing said it plans to boost productions of its 737 planes. We'll be right back, folks.
Timing the Trade Charts is a complete charting software package that brings together all the tools that you need to analyze stocks using Tom O'Brien's Timing the Trade methodology in one easy-to-use application. For the low yearly rate of $449, Timing the Trade Charts automatically computes swing points, ABCs, Fibonacci retracement levels, confluence, gaps, and much more. Timing the Trade Charts is now available at tfnn.com, and you can download it and try it risk-free for 7 days. We're so confident that you'll love this this new charting software package that we're offering a 30-day, no questions asked, money-back guarantee. If you're not completely satisfied with this software, just let us know within 30 days and you'll get a complete refund. In order to take advantage of this great offer, log on to tfnn.com and click on the Timing the Trade Charts banner or call our office at 877-518-9190. That's 877-518-9190.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway. Starting Tuesday, June 21st through Labor Day, TFNN will hold a drawing once a day, 5 days a week, business days only. One lucky entrant will receive one of these beautiful coins. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks. Go to the front page of TFNN.com for more information. Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
Okay, welcome back, folks. Ken Shreve with you on the TFNN radio network, and let's check on the markets here. Half hour to go in Thursday's session. Boy, the Nasdaq was bleeding pretty bad. Now it's only down about 13.5 points, 0.5% to 2617. The Dow is now up about 41 points, 0.4% to 11,938, and the S&P 500 down fractionally, nearly 1 point to 12,064. So I think really it's all about the Nasdaq at this point. We really want to see this index firm up. It did break below its 200-day moving average, a longer-term level of support, and then we talked about the March 16th intraday low, which was 2603, and the Nasdaq hit an intraday low today of 2599. So technically the Nasdaq is still in rough shape, but it is trying to recover off its lows with about a half an hour left to go in the session. Before we went to break, I quickly talked about Goodrich Corporation. This is a stock that is outperforming today. Shares were up nearly 3% to $90.68. Looking at a weekly chart for Goodrich here, again, this is a company that's a supplier of aerospace components. A lot of aerospace suppliers doing well today. Part of it may have been news yesterday, again, that Boeing said it plans to boost production of its 737 aircraft by 33% a month to work off a record order backlog for the jet. So Goodrich Corporation having a good day today. You take a look at its weekly chart. This is a classic example of what a base building stock looks like that could be on the verge of a breakout over 92.49. The swing point of 92.49 would be found right in this area here, the start of the base here. But this is a good symmetrical base. The stock firmed up at its 40-week moving average. You could see an upside breakout here for Goodrich Corporation. But yeah, the name of my show is Breakout Investing. I like to target strong price performers in the market for my ultimate growth stocks model portfolio. But this is a very, very difficult environment, not only for the growth stocks that I target, but for technically healthy stocks as well. In other words, there are stocks that still have strong charts that are actually getting taken apart today. So a weak market is eventually going to get everything with it. We've seen some pretty intense selling since over the past month or so. Some names headed into today were still holding in there pretty well, but we'll go over names like Netflix and Priceline and some of these other decliners in a moment. But really the selling has spread out quite a bit. But Goodrich Corporation looking quite strong technically, and the stock is outperforming today. Also want to talk about a stock that was really left for dead, frankly, in 2008, 2009. Maybe a name that is familiar to you, a shoe maker called Crocs. The sandals came out, they were a huge hit, and then the company ran into all sorts of execution issues, 2007, 2008, 2009. But boy, has this stock really come back to life, and I think the management really deserves a lot of credit here. You see the strong price performance. Shares were recently up about 5% today to $23.75. Fundamentals are very strong here. You've seen revenue growth start to accelerate again sequentially in recent quarters. So what you have with Crocs is a good breakout and then support at the 10-week moving average. So technically still a very healthy stock in an unsettled market environment, worth paying attention to. Let's also take a look at FMC Corporation. I'm going to pull up a chart of FMC. That's the ticker as well. FMC Corporation. They're a maker of agricultural, industrial, and specialty chemicals. The stock is mostly unchanged on the day. It's trading around 79. It hit an intraday high of 80.65, so it has reversed off its high. Still a stock that recently found support at its 200-day moving average, but you can see I drew a descending trend line here. It's going to have to get over 82 for really a new uptrend to begin. So FMC Corporation well off its highs today. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Okay, folks, welcome back. Ken Shreve with you. Breakout Investing with Ken Shreve on the TFNN radio network. Also wanted to take a look at Cubist Pharmaceuticals. That's ticker CBST on the NASDAQ. The stock up close to 3% today to 34.62. Stock fell below its 50-day moving average yesterday, is now trading back above the line, pretty much in the middle half of its trading range today. But this is a high-quality, profitable biotech. The news today was that the maker of antibiotics announced positive results for 2 phase 2 trials. So Cubist Pharmaceuticals, the biotech sector is tricky. I don't tend to invest in the super speculative biotech names. I like to find biotechs with high return on equity, for example. I like to target profitable biotechs with a fairly consistent record of top-line growth. So I really demand that there's a fundamental story, not a story of hype and hope and about bottom line and top-line growth 3 and 5 years out, but really companies with a good track record of performance. Cubist has a market cap of just over $2 billion. Again, return on equity is very high at 30%. Company generates a lot of cash, good institutional sponsorship, fairly strong fundamentals, and a stock that looks like it could be trying to find support at its 50-day moving average. Quick check on the markets here. NASDAQ continues to fight its way back. It got very hairy there when I went on the air. NASDAQ was down about 1%, but now it's only down about 10 points, 0.4% to 2621. The Dow up 72 points, getting stronger as well. That's 0.6% to 11,969, and the S&P 500 up 1 point. That's 0.1% to 1266. So looks like some buyers coming into the close. That's good to see. Listen, this is still a directionless market, and when I say directionless, it means that if this situation in Greece gets resolved, we could see a 200-point gain in the Dow tomorrow or next week, but we know that the trend is downward for now, and I still think the risk outweighs the reward in this market. At some point, the major averages are going to start to show signs that new money is coming into the market. I would not stay married to the stocks that worked during the last rally. There were a lot of tech names, for example, since the bull started in March 2009 that are up 100, 200, 300%. Some of these stocks are showing topping action. They will not, they will most likely not go on to lead the market when we do get a new bona fide uptrend. So the exciting thing about a pullback like this is that there are going to be new setups that take shape, and there's a good potential for new leadership coming to the fore. That's what I identify in my Ultimate Growth Stocks model portfolio, my newsletter, focus on the fundamentally and technically strongest stocks. There's been so much technical damage done in the market in recent weeks. Some of these stocks are just not I just really don't anticipate being leaders going forward. And frankly, I would include Apple in that bunch. Even a name like Netflix. I know that's a blasphemy to some growth guys out there, but I just think a lot of good news is priced into these stocks. Talked about some stocks today that were really hit hard. I want to take a look at Netflix. Haven't checked it in a while. Perhaps it's come back from the market, but this stock was underperforming at one point, and it still is, down $8.95, 3.5% today. There's big volume in the stock. If you see, it's still holding above its 50-day moving average. So Netflix is just a stock, even though it's held up well in recent weeks. Again, during a time when a lot of stocks have fallen below key support levels like the 50-day and even worse, the 200-day moving average, Netflix is pretty much right at its 50-day line right now. Big volume in the stock today. There's got to be some institutional selling going on in Netflix, but underperforming badly, down 3.5% to 248.17. Also wanted to take a look at a name I followed off and on during the years, Herbalife. They are a distributor of healthcare products, supplements, nutrition products. Some sellers in this stock today as well, with volume down nearly 3% to 52.51. Again, a stock that has been holding up quite nicely. Even with today's decline, it's still holding above its 50-day moving average, and shares down nearly 3% to 52.51. Its 50-day is down around 49.50. So this stock could go on and form a base, but another stock out there, frankly, that's looking a little tired. It's made a huge price run in recent months, so it is interesting to see some of the selling going on in some of these high-quality growth names. So we talked about Netflix, Herbalife. Take a look at Priceline as well, which we've been talking about in recent shows. This is a former holding in my Ultimate Growth Stocks model portfolio. I've taken a lot of money off the table really since early May. So my portfolio went from 16 stocks in the model portfolio all the way down to there are 7 in there right now. And out of those 7, 4 or 5 of them are new initiations. So only 2 from my original portfolio are still in there. Priceline used to be in the portfolio. I sold it for a nice profit several weeks ago before the bottom really fell out. Priceline underperforming today, down 2.4% to 459.89. It broke convincingly below its 50-day moving average several weeks ago. Still holding above its 200-day line, but sellers in Priceline big time today. And we'll take a look at Apple. Apple is also underperforming, not by much. It's down 0.8% to 324.04. This stock just flat out is damaged goods. People are going to talk about its very, very low valuation based on its trailing PE, its forward PE. Apple is no doubt a very cheap stock, but when you see a cheap stock like this that has suffered so much technical damage, I just don't see the sense in owning Apple right now. I don't feel like I'm getting it on sale at $324 a share. This is a stock, again, that I took profits in early May, mid-May at much higher prices, and I was pleased with that sell as well. So in terms of my model portfolio, playing defense, don't forget you can get a free trial to my Ultimate Growth Stocks newsletter right on the home page of tfnn.com. I'm right in the carousel. You can also click on the newsletters tab right at the top, and then click on investment newsletters, and you can find out about my methodology. We'll be right back, folks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
With you. Welcome back to Breakout Investing on the TFNN Radio Network. I wanted to take a look at a company called Insituform Technologies. That's ticker INSU on the NASDAQ. Shares really having a rough day today, down nearly 14% to 18.51. They kind of updated their 2011 earnings guidance, and it wasn't good. They forecast earnings of between $1.30 and $1.40 a share versus the consensus estimate of $1.70. Earlier this week, Janney Capital downgraded shares to neutral from buy. The company is a provider of technologies and services that basically help rehabilitate sewer, water, energy, and mining piping systems. Now, I'm talking about in situ form just because there's a good lesson in technical analysis here, and I do use fundamental and technical analysis when evaluating a stock. But you can see back in March, April, May, when in situ form fell below its 10-week moving average, you can see how the 10-week line really started to turn into a ceiling. It turned into a resistance level for the stock. And the longer a stock stays underneath its 10-week moving average, the more likely it is you're going to see continued price weakness. And that is certainly what you saw with in situ form today. The stock, down sharply for the week. Again, recently trading around $18.66 a share. So resistance at the 10-week moving average. This is just a good lesson. If you own a stock and it breaks support and it can't get back over support, it's usually a good opportunity to get out of the stock, lock in profits, or at least keep losses small. There's another stock in the market that's kind of showing similar action. It hasn't broken down yet, but it is a stock that has gotten a lot of press lately, and it's a company called ARM Holdings. They make chips for the Apple iPad. You can see the tremendous price run it's made in recent years, but this is a stock that looks to me like it's breaking down technically. Again, ARM Holdings, ARMH on the NASDAQ, a huge price run. Big bull market leader, but you can see just a clear example of what resistance at the 10-week moving average looks like. Now, there are going to be people that say that fundamentals still look good here. Again, the huge price run that this stock has made just makes me a little nervous up here. I do not own the stock, but technically it's just acting very weak to me. Coming up after the close, we're going to take a look at earnings from Research in Motion. This is a stock that really has been hit hard. Shares up about 0.5% to 35.33, near a 52-week low, ahead of the report. The estimate is for profit of $1.32 a share. That's down 4% from a year ago. Sales up 22% to $5.15 billion. A lot of execution problems recently at Research in Motion. Perhaps a lot of bad news has been priced into the stock. It certainly has been hit hard. Analysts expect smartphone shipments of about 13.3 million units for the May quarter, with about 436,000 units of the company's newly launched Playbook tablets. So you get a number in that 400,000 area. The market may like that. Whether or not all the bad news has been priced in here remains to be seen, but Research in Motion will be the focus of investors' attention after the close. Don't forget, tomorrow is options expiration. I believe that's true, the third Friday of the month. Economic data on tap tomorrow. We've got the University of Michigan Consumer Confidence Index. It's expected to fall slightly to 73.5 from 74.3. So I will be filling in for Tom O'Brien tomorrow on his show from 4 to 5 p.m. Eastern, so I'll look forward to talking to you then. Don't forget, again, free trial to my Ultimate Growth Stocks newsletter right on the homepage of TFNN.com, and be sure to check out that Great Panther Silver giveaway. That's right on the homepage of TFNN.com as well. We'll talk to you tomorrow, folks. Take care.